This is Patrick from EasyFX Code Trading System, and it is Wednesday, the 19th of February 2020, and it's just after 8 p.m. in Singapore, which is about 7 a.m. in the US East Coast time. And this is the midweek review of Euro, Cable, and the Aussie dollar. Let's kick off with the Euro. And the euro is still continuing to weaken and fell yesterday right to the weekly S1 pivot at the 1.0786, and this week's weekly pivot is at 108.72. So it's just dipped below the 108 support level, and it's holding support at the weekly S1 pivot. This was after yesterday's poor German ZEW economic sentiment indicator, and as well as the Eurozone as well. And so overall it has turned bearish, or continued its bearish move from the previous couple of weeks. And there's only a couple more days of news coming up with the ECB meeting minutes, and Friday will be the flash PMIs for services and manufacturing, and as well there's a lot of concerns with the COVID-19 virus hitting Europe and impacting the economy, as well as concerns on the political side with Germany and Ireland, and as well as the Brexit trade talks with the UK, and concerns with the US impending tariffs coming up on German cars especially. So all these has been driving the euro lower, and there's also further trade disputes with the UK this week and the last since the start of the week, and it doesn't seem to be abating just yet. So overall sentiment is still bearish, and we'll see whether this support will hold or whether it's going to continue lower towards the next Fib extension level at the 200, which is at 107.23, and that's also below the weekly S2 pivot at the 107.41. So at the moment it doesn't seem to be finding any support in the near term. So if it does find some intermediate support and bounces, there's still going to be some resistance now at the just above the 162 extension level. So let's mark this area here now, which could be an intermediate resistance zone. All right. Let's move on to cable, and cable is struggling as well to climb up above 130. This week's weekly pivot is at 129.96, and it's sitting there. It's been consolidating in a very tight range, and is not able to break above this apex of the consolidation triangle that it initially fell out from. So it's struggling to climb up above the 21 Fib retracement level, and just earlier today, there was some good news from the UK with positive, better jobs report than expected. Only slightly worse was the average earnings, which was just slightly lower. But the claims was less than expected, so it gave a slight boost in the short term. Let's switch over to the 4 time frame. But then it hit the 200 period EMA and continued to fall back and finding support around the 129.75 area. So it's consolidating in still a very small range of 50 pips until it finds an excuse to trigger a bullish move above the 21 Fib retracement level. The major now the significant intermediate support is around the 129.40 to 50 area. So we'll see if it's able to dip lower to that area. If it does, then there's a good opportunity for it to take off and rebound. But if not, this trend line is still holding as a strong resistance area. Right, coming up tomorrow, there's only one more set of news, which is the UK retail sales. So we'll see what the impact is for tomorrow. And at the moment, this is the key support area. We'll see whether this is going to continue as a critical support zone where the weekly pivot is sitting there as well, all at the 1.30 round figure level. Alright, so let's move on to the Aussie dollar. Aussie dollar as well has been consolidating and narrowing into a apex of another triangle here, and it's struggling to stay above the 0.6700 round figure area. The weekly pivot is at 0.6709, and we'll see whether it's able to break out higher above the triangle. This morning's RBA minutes showed that they did review potential rate cuts, but decided to hold. And with concerns from China, this took a dip lower, and now we can form a lower trend line of the triangle, and we'll see whether it's able to hold and continue to recover. So tomorrow's Australian jobs report is going to be a key data, and with that, then it's possible there could be a breakout. Otherwise, if it's poor data, then there could be a further breakdown. Alright, so there are a couple more news events coming up from the US with the FOMC meeting minutes, and Philly-Fed manufacturing index, as well as their flash manufacturing and services PMI. So those could also contribute to these three major pairs for this week as well. Let's take a quick look on the 4-hour time frame, and you can see it's narrowing into a very small tight range of also 40-50 pips, and we'll see whether this will hold as support or become a strong resistance zone. Okay, meanwhile, do check out my other video on spot gold and dollar yen, and have good trading rest of the week, and cheers.